Hi, and welcome back. Our topic for today will be about IRS unfiled tax returns. So you or your client have unfiled returns. Sometimes you say, well, I don't know, or your client will tell you, I don't know when was the last time I filed. Very simple, just real quick, call Practitioner Priority Service and ask. It's very simple. We have a whole topic about Practitioner Priority Line. So review that one, and that will instruct you with everything you need to know. Now, if you don't file a tax return, or your client doesn't file a tax return, an IRS unfiled return is subject to a penalty of up to 25%. And usually, the due date is April 15th of any given year, so they take it at 5% each month. So 5 months, by September you're done, 25% penalty on the taxes owed. An IRS unfiled return is subject to an unpaid penalty of up to 25% as well. September comes, then the unpaid penalty on taxes owed begins, and that's another 25%. So just think, if you have a client that files a return and the tax liability is $10,000, right off the bat it's 50% to that $10,000. So $5,000 in addition brings it up to $15,000. Now consider this other thing. Now we owe the IRS 15 grand. Interest begins to apply. Failure to pay penalty again applies on that $15,000. And if you add them up, because it's compounded daily, it's about 20% a year. So let's assume today is July 2008, and we have an unfiled return back in the year 2000, which is due April 15th, 2001. So we have 02, 03, 04, 05, 06, 07, 08, 7 years. Just real simple arithmetic, times 20%, that's 140%, times the $15,000, 140%, 1 year, we owe now $21,000. It started out at 10, now it's 21 grand. So make sure any unfiled return gets filed right away to eliminate any penalties. And if you can pay, pay. When I used to be an IRS agent, towards my last days with the service, one of my jobs was to go after non-filers. And it's the same method I've used since 1994 in practice, and I've literally helped thousands of clients, thousands of returns have been filed, and let's go ahead and begin. So what do? We have unfiled tax returns. First and foremost, engage your client if you're representing a client, and we have a subject on that. So please review it, and we also tell you what I charge, so therefore it's up to you to charge the same. We have an engagement agreement, power of attorney, and so forth. Then you call Practitioner Priority Service after you engage your client, and just simply ask them, hi, I have a client, he's a non-filer, she's a non-filer. Number one, I want to know what years are not filed. And secondly, I would like to order the wage and income transcript. Remember those words, wage and income transcript for these unfiled returns. They'll say, okay, you send them the power of attorney, they go ahead and fax you the information or mail you the information. Then you know who filed what on you or your client, such as W-2s, 1099s, etc. of that nature. And obviously, if the client or yourself own rental property, that will not be submitted to the IRS, so they have no information about it. So you need to ask your client, what other income do they have besides what the IRS knows. Prepare the returns. Now, let's assume you're asking for income and wage transcripts for the year 1995, and the IRS has no record because it dates back to so far back. But they will tell you that, hey, wait a second, there has been a substitute for return filed by the service assessing the tax on your client. Okay, so what I do is I tell them, okay, fine, can you send me an account summary? An account summary for 1995, the IRS has done a substitute for return, will show me total income, taxes owed, and they will also include a line there if there's any self-employment income. So if your client received a 1099 miscellaneous form back in 1995, the IRS doesn't know his expenses or her expenses, just the income. They assess the entire income. They will assess the self-employment tax, which is 15.3%. So it's easy to solve for total income, solving for X. 15.3% of X equals what? Here we have the amount, so we need to solve now so we can arrive at income. 15.3% of X equals, let's say, is $3,000. Then we solve for X to arrive at the income reported to the IRS. Then we prepare a return based upon that. What is a substitute for return? Very simple. The IRS already has income transcripts, W-2s, 1099s, gambling winnings, unemployment compensation, etc. 1099-Rs if somebody withdrew an IRA. They don't do anything. They file a return based upon single, input all the income, arrive at taxes, and file it. And now your client or yourself will owe the IRS money. So when you retrieve the information, you might have expenses opposing those incomes, number one. So you need to do proper financials. Secondly, you're married, maybe, and you might have children, maybe 2 or 3 kids. So now rather than filing single, you're filing married, filing joint with the kids. And the expenses, which literally lessens your tax liability to the IRS. So simple, you call practitioner priority line, get all the information you need, file those returns, and make sure to review the segment on the engagement agreement so you understand what it is that you need to do, the power of attorney, engagement letter, and so forth. And it is a money maker. I mean, there's a lot of people, if somebody owes the IRS money for the year 2001 and 2002 from a substitute for return, you can't establish a payment plan with the IRS or do an offer and compromise unless your client is in full compliance. You need to prepare all the returns. So you engage your client, you prepare all the returns, and if you're stuck anywhere, visit our community and we're there to help you. Thank you for watching.